All right, let's get right into it. A political stalemate in Washington, D.C. I know, it's a story you've probably heard before. But what if this time the gridlock wasn't just some domestic headache? What if it was a seismic event, one that's shaking the entire global economy? We're going to break down how the 2025 U.S. government shutdown became less of a negotiating tactic and more of a weapon, one aimed at the whole world. And to really get just how different this is, you have to start with this quote from the president. See, the strategy has totally shifted. This isn't about temporary disruption anymore. It's about making permanent changes. The goal here, as the quote lays out, isn't just to pause the government, but to use the shutdown as a tool to, well, dismantle parts of it from the inside. And that, right there, changes everything. So that's the big question we're tackling today. How does a partisan budget fight on Capitol Hill send shockwaves to a boardroom in Berlin, a tech hub in Bangalore, and a stock exchange in Tokyo? What are the actual mechanics that turn America's political dysfunction into the world's economic problem? To figure that out, we're going to follow the chain reaction. We'll start with the weapon itself. What makes this shutdown so fundamentally different? Then we'll trace the damage, first inside the US, and then as it spreads across the globe. We'll look at the chaotic way markets react, who actually manages the profit from it, and finally, we'll talk about the one thing that might never get fully repaired: trust. Okay, first up, a new political weapon. Before we can see the global impact, we have to understand the mechanism. What actually makes the 2025 shutdown so different from all the ones that came before? So, what even is a U.S. government shutdown? Well, put simply, it's what happens when Congress fails to pass a budget. The money just stops flowing. And thanks to a pretty old law from the 1800s, this means most federal agencies are legally forced to just stop. Non-essential workers are sent home and their paychecks stop right along with them. And what's kind of wild is how uniquely American this whole problem is. You see, most other developed democracies have a fail-safe. In places like Germany or South Korea, if the politicians are deadlocked, the government doesn't just grind to a halt. Nope, it keeps operating on a provisional budget, just using the previous year's funding. This lets the political fights happen without holding the entire country hostage. The U.S. system, on the other hand, well, it allows for complete operational paralysis.
And this is the crucial point. This is the absolute game changer for 2025. In the past, workers who were sent home were legally guaranteed to get back pay. It was a temporary shock, sure, but temporary. This time, the White House told agencies to get ready for reduction in force notices, or RIFs. A RIF isn't a temporary furlough, it's a permanent layoff. This transforms the shutdown from a negotiating tactic into an administrative weapon. It's no longer a temporary pause, it's a potential purge.
And that new weapon? Well, it creates the first massive ripple effect, a huge self-inflicted wound. Before this crisis goes global, it causes incredible damage right at home. Let's actually put some numbers on it.
The top-line number is just staggering. For every single week the shutdown continues, it shaves at least $7 billion off the U.S. economy, and some estimates put it way higher than that. That's real money, real lost wages, canceled contracts, and just frozen economic activity.
And behind that big dollar amount is the human cost. 750,000 federal employees sent home without pay. For a lot of families, that's just devastating. And remember, this time it comes with that unprecedented stress of knowing that a temporary furlough could turn into a permanent layoff at any moment.
And the impact just cascades through society in ways you might not expect. It's not just offices being closed. National parks shut down. Vital medical research at places like NASA and the NIH gets put on hold. The economic data that everyone, from Wall Street to the Federal Reserve, relies on, it just vanishes. Small business loans freeze, home sales get delayed, and even public safety inspections are cut back. The government is kind of like the operating system of the country, and it's being turned off.
But the damage, as you can guess, doesn't stop at the U.S. border. There's that old saying, right? When America sneezes, the rest of the world catches a cold. Well, this is a very, very bad cold.
The impact on major trading partners is direct, and you can actually quantify it. So take the European Union. Economists figure that a 2-week shutdown costs the EU economy 4 billion euros. If it drags on for 8 weeks, that number quadruples to 16 billion euros. And that's a direct hit from one simple thing. Americans are buying fewer European goods and services.
But it's not just about what people are buying. The shutdown literally injects sand into the gears of global trade. U.S. ports slow down. And crucially, the government agencies that approve export licenses for high-tech goods, they just close their doors.
So if you're a US company trying to sell, say, aerospace parts to a global customer, your business is now just frozen.
For a key partner like India, the impact is a perfect storm. We can see 4 distinct hits. First, all the political instability spooks investors, causing a huge outflow of capital. Second, the freeze on H-1B visas slams India's critical IT sector. Third, this all gets piled on top of an existing trade war, which causes exports to just plummet. And finally, all this uncertainty puts a chill on the venture capital funding that so many Indian startups rely on. It's basically an assault on every pillar of their economic relationship with the US.
Now, all this global uncertainty inevitably spills into the financial markets, but the reaction, it's been deeply confusing, almost contradictory. It's like a tale of 2 completely different realities playing out at the exact same time.
This split is just fascinating to watch. On one hand, you've got the stock market hitting record highs. Why? Because a lot of investors are betting that any economic damage will force the Federal Reserve to step in and cut interest rates. They're not trading the disease, they're trading the cure. But at the same time, you have precious metals like gold and silver also surging to record highs. Those investors are fleeing to safety. They are pricing in the disease, the political chaos, the instability, and the potential for a weaker US dollar.
Now, in all this chaos, it's really tempting to make comparisons to 2008, but it is so critical to understand that these are not the same thing. 2008 was a systemic financial crisis born in the private sector. This is a political failure born in Congress. The core problem back then was insolvency. The banks were literally broken. The problem now is a lack of spending authority. The money is there, Congress just won't let the government spend it. And the impact shows that difference. This is a fractional hit to GDP per week, not a 4% collapse at the entire economy.
You know, while the shutdown causes all this widespread pain, chaos is rarely a universally negative event. In geopolitics and global finance, one country's self-inflicted wound can be another's opportunity. So, who actually stands to gain from all this? While the clearest winners are probably U.S. geopolitical rivals. For a country like China, the shutdown is a powerful propaganda tool. It's real-world evidence for their narrative that American democracy is just chaotic and failing. Economically, with the U.S. Export Financing Bank basically shut down, competitors like Europe's Airbus get a clear edge over Boeing. And maybe most importantly, every crisis like this chips away at the dominance of the U.S. dollar, giving foreign central banks yet another reason to speed up de-dollarization, that slow but steady shift away from the dollar and towards other assets. This chaos also triggers a really predictable flight to safety in the markets. Money flees volatility. It rotates into what are called defensive stocks. You know, companies that sell things people have to buy even in a crisis, like electricity, toothpaste, and medicine. And as we've already seen, when trust in government starts to falter, investors run to the oldest form of money there is, precious metals like gold and silver.
And all of this brings us to our final section, the trust deficit. Because even after the government reopens and the back pay is finally sent out, this crisis is going to leave behind some deep, lingering scars that are much, much harder to heal.
And this is really the bottom line. The real long-term cost of the shutdown isn't the lost GDP. It's the lost trust. Trust in the U.S. political system, trust in the U.S. as a reliable partner, and trust in the U.S. dollar as the bedrock of the global economy. Each one of these shutdowns is a deliberate blow against that trust.
Which leaves us with a final and pretty unsettling question. For decades, the United States has been the world's economic anchor, the ultimate safe harbor in a storm. But when that anchor itself becomes the biggest source of volatility and political risk, where does everyone else turn for safety? That's the question that's going to shape the global economy for years to come.